Today I want to talk to those people who are challenged and are trying to find ways to grow and build their businesses. And we have a great panel here who's going to help us to work through some of those issues as we seek to move forward. We're going to try to be optimistic. We're going to bring hope to the process because it's said that wherever there are challenges, there are opportunities to grow. So that's what we're going to be doing. And we're going to start today with our panel of four. We have two persons who are joining us from overseas and two persons from right here in-house at VM. Uh, and among them, we have a gentleman who I've seen speak many times right here in Jamaica. His name is John Stoltzfus. He is the Chief Investment Strategist at Oppenheimer. And Oppenheimer is a global group of financial organizations that provides us with advice and information about global financial markets. And he'll be joining us virtually. And John, to say that John is a veteran is an understatement. He has 30 years of experience in the area. And with all of his accolades, one of the things that John is well known for is that he breaks the thing right down to a granular level and makes it accessible for all of us. So we're going to be looking forward to a presentation from him this evening. Rob Thurner joins us as well. He's the digital guru. He knows all about how to integrate digital issues into your businesses and how he's the man who will come and do an assessment of your business, large, small, medium, and he'll be able to tell you how you can use what you have and take it online to do business in the virtual realm. And our hosts, actually, they're hosting us. Today we have Margreta Hall, and she is from foreign exchange trading. Now, the issue of foreign exchange is a funny one at the moment. For those who are doing well in foreign exchange trading, things are looking bright. But it's also a kind of a balance when you're looking at the national outlook. So we're going to talk to Margreta a little bit about balancing some of those issues of foreign exchange as we move forward in business. And we also have Dwight Jackson, who is going to be talking to us about capital markets. As we know, this is the integration of capital into our businesses and how we're going to work that out. We have a full plate today. But we're going to start with John. Let's start with John, who's going to take us, talk to us about the global situation. And of course, as we know, our local markets exist within the framework of larger global markets, and they take their trends, and the trends of the global markets dictate a lot about what happens here in Jamaica. So John, you take it away. Let us know what's happening across the world so that we can adjust accordingly and do what we do best here in Jamaica.
Well, Deborah, thank you very much for that marvelous introduction and really making it very clear for me where I need to address a few points I think that are important as to where we are today. Indeed, as you said, an extraordinary situation where we are. Who would ever think that we would experience a global pandemic on the scale that we have experienced over now the last 18 plus months, headed to 2 years once we get around to January of next year. So essentially, never, and I've been in this business for 38 years. Are you ready for that? Almost 4 decades in this business. And I have been through every boom, bust, and recovery cycle since 1983. So I'm a veteran of the markets, and I've never seen anything like this because the thing about it is we saw so many parts of the world economy and individual countries, segments of economies, large segments that were shuttered for long periods of time and are even shuttered today or coming out of shuttering with the chance that they might have to reshutter. An immense challenge. And as Deborah mentioned very, very clearly, it has been a situation in which we have seen remarkably many businesses, as many as have suffered, many businesses have actually been able to thrive. The distinction really has been the availability, the ability to use technology to either deliver one's service, to deliver one's product, the ability to marry essentially e-commerce with bricks and mortar, contactless sales in many cases of goods and services. It really has been extraordinary. And then, of course, the vaccinations. Who would have ever thought that we would have seen vaccinations developed in a 9-month period? That is a result of technology. And we are in a period today where technology if anything, technology has come of age. One would think in the history of mankind and womankind, of humanity, that technology has really come of age many times before, and it indeed has. But technology as we know it today in the digital space and what it does for our formerly analog driven lives is extraordinary. Technology is ubiquitous today. It serves both business and consumers. It's deeply embedded in our lives. We are essentially today on a constant upgrade cycle and willing in many cases to be on that upgrade cycle because it helps us communicate with our loved ones, with our business associates, with our clients. It is very much an essential thing. The issues of the day essentially are we coming out of this pandemic? What is going to be the effects of these variants? Are they going to take us into yet another chapter of lockdowns? We do not believe so. And of course, we are not medical professionals. We're investment people, but we do talk to medical professionals. And we read a lot. And we listen to a lot of people in the medical community speak. And from what we can tell, the vaccinations and the development of the vaccinations, the ability to model how these viruses work should be has been fairly well outlined in the original battle against COVID-19, and we would expect the variants will likely be dealt with in the same fashion. The thing is, indeed, our lives have been, at least near term, changed in many ways, not so much about how humanity reacts, but it just has to do with how we live our lives specifically. You know, a lot of washing of the hands, keeping a supply of masks handy, all kinds of things like that. Social distancing, in some cases, being careful when people gather in groups, etc. But we find very much as Deborah mentioned, in this environment, which has had heightened risks, opportunities have really presented themselves extraordinarily so. And much of the opportunities developed as a result of fiscal policy and a central bank policy across the world that provided substantial levels, extraordinary levels of liquidity. Significant largesse, for example, in the US of our Federal Reserve, and of two administrations, the Trump administration and now the Biden administration, and Congress in representing both sides of the aisle, as we say, about Washington, D.C. and Congress, essentially providing a cushion or a bridge over troubled waters. And we think that coming out of this, we are in the process of coming out of this, but it does not mean without challenges. That's why we say it's summertime and living is not so easy. On a day-to-day basis, people wonder how things are going. But one thing is long-term investors, and you know, we define longer-term investing. When I got into this business, used to be 10 to 20 years out. Today, because of technology, intermediate to long-term, it starts at 3 years, 3 years, 5 years, 7 years, 10, and 20. And what we have found is among the opportunities that we like today, we continue to like technology, even though there are some people who say, oh, technology has its run. We think technology has much more to offer as we move forward. This is not like the tech bubble of the late 1990s into 1990s into 2000 in our viewpoint. What we see is technology is nowhere near the plateau that technology had reached during the tech bubble. Here, technology keeps building upon itself. If anything, there's a shortage of chips because there's so much demand. for all kinds of industrial products, household items that use chips. Essentially, the semiconductor is a very important part of our lives today. In addition to that, we like consumer discretionary because we believe both e-commerce companies and companies that combine bricks and mortars or traditional stores with technology, with e-commerce, is a good place to be. We also like industrial equipment, where industrial equipment today really is the new technology. When I got into this business all those many decades ago, when you talked about industrial equipment, it was large tires, it was gears, it was all kinds of dials and metal and steel and copper. Today, oftentimes it still incorporates those materials, but it's driven by technology, whether it's sensors that tell the driver of the vehicle what the load is like, what the weight is, what the pressure of the tire is, how many miles do they have to go? Are they connected to the GPS to find the directions where they're going? And so we find that it's a great place to be. And we like financials because we do believe as low as interest rates are today, as things get better, interest rates are likely to rise. We don't think they're going to rise exponentially. We don't think we're headed to a period where we will see the high interest rates of the late 70s and the early 80s. Can you imagine? I can remember speaking with clients back in the mid 1980s about 10-year US treasuries that had a yield on them of 13.4%. Can you imagine? Today's 10-year treasury is about 1.29, 1.34%. Extraordinary. And part of that has to do with the fact that technology has created a world of greater competition. It has enhanced globalization, and it has set competition among nations, among corporations, among the producers of commodities. And as a result of that, competition tends to be counter-inflationary. It has the potential, and recently, especially coming out of the pandemic, it has increased productivity, that ability for us essentially to produce more in the same period of time that we would have produced less for before. And with that productivity, we could see higher wages, but still maintain inflation at modest paces. And that's where we think we're headed. But we do believe that equities right now tend to be a better place for many investors with intermediate to longer term goals, because fixed income doesn't yield a heck of a lot. The rule of 72 tells you that if you get 1% every year and you compound on that, you can still double your money, but it'll take you 72 years to double your money. On the other hand, if you can get that return onto to a compound rate of 6%, you can double your money in about 12 years. Substantially more practical time for most of us in terms of how we want our investment money to grow to meet our needs and objectives, whether it's for retirement, for putting a child through college, for providing for a family member, or building funds to start a business, what have you. So our outlook is very positive as we look forward. We always recognize that where there is risk, you will find opportunity invariably in our experience. And we often find too that wherever there's opportunity, you will find risks. So it takes an ability to assess the situation, to judge. We think at this time we like to be very well diversified, and at our diversification right now, we for U.S. investors, we are suggesting being overweight U.S., but having meaningful exposure to both international, emerging, and developed markets. We believe the U.S. economy will approach a sustainable economic expansion in a relatively short period of time. And because of the demand of the US consumer, both business and the private consumer, we believe that it will help buy goods and services from around the world, increase demand for leisure products and services, and could very well bring us, if not a boom, an economy that was growing very similar to the one that we had before we entered the pandemic. I'd like to show you a few charts really quickly, if we can. I think I'm coming up to my time limit here. But if we could go to just bring up one of the charts, if you would, and I can show you what we have in terms. These are the sectors. These are the sectors of the S&P 500, but they are also called GICS or General Industry Classifications, and essentially it gives you an idea of what today's indices are comprised of: segments of technology, healthcare, consumer discretionary, communication services, which can be media or telephony. It can also be websites, major portals to the internet, financials, of course, big banks, industrial companies, companies that make things like tractors and engines for trucks and industrial equipment, bulldozers, etc. Robotics are in industrials as well. Consumer staples. In the old days, they used to call this Coke, smokes, and soaps. Today, we would say it's the kind of stuff that you always need to get, toothpaste, Kleenex, or what have you, and cereal and things like that. Real estate, of course, both real estate, both for commercial purposes as well as for residential. And then materials, that's the stuff of which things are made of, whether it's steel, whether it's the chemicals that develop them. And of course, energy tends to be the traditional oil, but of course, moving towards alternative energy on a greater basis every year. And utilities, that's your electric utilities. Next slide, please. We have found that there's has been for the last few years, growth stocks had outperformed value stocks. Growth stocks are generally newer companies that it's anticipated will have increased earnings as their products get known, as they position themselves in business. Value stocks are considered to be established companies that are easier to analyze and predict going forward, knowing what analysts know about them, how they're going to perform in terms of pricing and in terms of how they develop their business. Growth has outperformed over the last few years, but all of a sudden, last September, value began to grow much faster. And at that point, investors moved into value, but then growth came back into vogue this year, in May of this year, right through August, the end of August. And recently, value is beginning to come back. We believe investors today, based on the needs that individuals and businesses have, are looking for greater diversification in equities. So we think you want to own both growth and value stocks, diversified, growthier value or more innovative value, and GARPier or growth at a reasonable price, technology and other growth segments. Next slide, please. This shows you Bitcoin. Bitcoin is very popular with many investors these days. It's particularly those who like to speculate. As a viewpoint at this time, as a strategist, I am not in favor of Bitcoin. I believe in currencies that are backed by governments. The accountability, the governance, and the credibility and the transparency of fiat and sovereign currencies it gives you greater stability, as you can see here via Bitcoin. But we do think what is driving Bitcoin is, in many cases, we think it's being used by money that is trying to flee areas that politically have real serious problems in them. We also think that in some countries where taxes are rising exponentially, investors are using Bitcoin to move currency out. But it's a very, very volatile thing, and it's not one that we endorse, but I did want to show it because it's part of the contemporary environment. Here's the treasuries. Now, the 10-year treasury yield, as you can see, this year was as high as 1.74%. And currently, it's if I check my screen a second, I can tell you where it is right now when I'm looking, it's at 1.25%. And so what has happened is the bond market has, and it's been as low this year as 0.9%. So my point here is that related to the 10-year treasury, we think yields will come up, and you can see they've started to move up, but they sort of failed to stick at higher rates because the 10-year treasury yield reflects the belief by the bond market of where inflation will be over the next 10 years. And this gives you an idea that the bond market is less fearful. There's a thought now that the Federal Reserve will first begin to taper its monthly bond buying program. And we may hear something about that this very week when the Fed has its FOMC meeting, or a little bit later this month from Jackson Hole, Wyoming, where the Kansas City Fed has an annual meeting. But the idea here is look for interest rates likely to rise if we don't have a real setback from the virus. Now, this is the VIX that shows volatility. This is an index that reflects options on the S&P 500. And what this essentially shows is that we are at the low end of expected volatility. Now, usually what that means when you hit this low level, when it gets around 15, some piece of news will come out that will create volatility. You'll get a spike. There'll be tremendous amount of excitement, but it generally passes in a few days, and people realize that the underlying trend of improving economics and improving earnings appears to be stable, and you'll find that volatility will come back again, will come down. So when we look at this, we would just say, don't get too complacent. Know that there's volatility, but don't let volatility, we would suggest, be something that keeps you from looking at what's happening in the markets, what's available, and thinking of the availability to intermediate and long-term investing. I think with that, we see oil prices have been rising this year on expectations that the world economy is coming back. But don't forget that just last year, in March of 2020, there was one point where oil was selling for negative $37 a barrel. You had to pay somebody to take it off of your hands to store it. Are you ready for that? But the overall trend for oil would appear to us to be in a range of from about $60 to about $75 as we move towards an improving economy. Lastly, earnings are doing terrific this year because it's comparison. Last year, earnings were challenged for many companies. This year, the comparisons are much better. For the overall, for the S&P 500, earnings are unprecedented. 99% growth as of last Friday's close of the week, with earnings growing at 25%. Expect that to come down as we go forward. The main thing is to look for positive earnings growth as we go forward. And I think that's it. I don't think there's another. Well, I think that's it. I want to thank you for my time that I've given, and I look forward to being of service again to your organization.
Thank you, John. It's wonderful to have you. You know, it occurred to me, and I'm wondering if you could help us with this. You spoke about the notion of the American markets having a cushion and a bridge. Unfortunately, in the developing world where we are, very often countries like ours are not necessarily cushioned in the businesses are not necessarily cushioned in the same sort of way, and the bridge doesn't necessarily exist in a similar sort of way. What would you say to us as individuals who are operating in a financial market within a developing context that have to weigh uncertainty with confidence? We see an improvement in business confidence here in Jamaica. How do you suggest that the average business person approach his next year's projections?
I think a very important thing for a business person, whether in a developed or an emerging market, would be to consider how to upgrade their technology to serve their customers better, to manage the costs of their business better, and to also create the facility for their employees to have greater productivity.
Excellent. Thank you very much, John Stoltzfus. You spoke to us about emerging markets in hybrid markets, moving towards technology, financial markets looking good. We like to hear that here at VM, don't we? Technology as a sector, a sector that's something that we need to be looking forward to. Leisure, I'm interested in that, John. I'm interested in the cultural and creative industries and the creative economy. And of course, you say industry. is looking good. We hope so. Our confidence, our business confidence numbers, the index increased by 130.8 points in June. This year, compared to 115.2 in March earlier this year. And so our business confidence is up a bit. And speaking of business confidence, we have what we're going to be doing today is we're going to be talking to a number of business leaders in different sectors who are going to be telling us, giving us some information about how they feel about business in Jamaica at this point. So we're going to Richard Pandui, who is Group CEO of the CEPROD Group, and we're going to get some perspectives from our business leaders who are going to be telling us about how they feel about doing business in Jamaica. This is the VM Group's Wealth Talks, and today we're talking about possibilities after the pandemic, beyond the pandemic, within the pandemic, as we make wealth accessible.
I'm Richard Pandui, Chief Executive Officer for CEPROD Group Limited. The 2021 has been quite challenging. I mean, we have seen the continuation of the pandemic. And to be honest with you, we had a lot of hope that by September this year, that would have been would have adjusted somewhat to COVID, would have seen school reopening. We expected the tourism sector to be rebound, etc., as the world became more vaccinated. So we had these expectations. Unfortunately, what we're seeing in Jamaica is that the take-up has been rather low. The availability of the vaccine has been low up to now. And so we're now resetting and looking at the rest of 2021. We're not as optimistic as we were maybe 3-4 months ago. So we're cautious. Now, there have been some very positive signs. I mean, I've seen the Minister of Finance come out to say that the rebound on tax intake has been very, very positive, well above last year, going above what they expected. The BPO sector has been expanding. The tourism sector has had a very nice summer so far. So the construction sector has just not stopped booming. It's unbelievable. So you're seeing some good pockets, some good signs. For the manufacturing sector and for companies like CEPROD, what we're seeing though is that we have huge supply chain risk in terms of supply, availability of raw material, shipping capacity, shipping costs moving up, shipping capacity not being available. So we see supply risk as being a big part of the issue going forward. We're also, in terms of the local economy, we're cautious because we believe that September, October, going to be very challenging months with respect to the pandemic. And we basically don't see the uplift we're hoping to see. So overall, I mean, positive sign, but we're very cautious that there are some real risks that could derail or certainly hold back the kind of recovery that we'd have hoped for. But nonetheless, as a company, we are adjusting. We have adjusted. I think when we talk about our customer consumers, the pandemic has created and has shown us that the channel one major channel for expanding business is going to be in the e-commerce platform. So we have actually launched our own platform to interface, not just selling locally, but selling to Jamaicans who are providing for their families locally, selling to people who want to buy from here for us to ship to them. So that's actually worked very well. In fact, the export market is a huge opportunity. That's something that we've pre-pandemic, we've always been working on it. It's a very important part of our growth strategy. Now it's even more important. I mean, and the world is, I mean, there's no border to the world now. So we're investing very heavily. In fact, we have been spending, our capital expenditure this year has actually been more aggressive as we prepare for the transformation of the business. I mean, it's really about who's going to adapt quicker, who's going to be more agile, and who is going to be able to take advantage of the opportunities ahead of them. Yes, there are challenges, but we can't sit on a ball about it. We have to figure out how we adapt to survive and to grow. I mean, we're much more than survive, we want to grow. So that's some of the things that we're looking at. been very trying, very challenging, but at the same time very exciting, because not very often, once in 100 years pandemic, and not very often most of us get a chance to actually truly transform business and hopefully be a part of transforming Jamaica. Jamaica has to transform for people to actually have a better quality of life, a more inclusive opportunity for all of us, where not just some of us, but for all of our countrymen to grow up and to have an opportunity for their children to be better educated, to have a better chance of a better standard of living. And at the end of the day, that's what we do. So yes, we're here to provide shareholder value and to grow the company, grow separate, but our bigger picture, we want to be a part of making Jamaica a better place for all Jamaicans.
And that was Richard Pandui, the group CEO of the Separate Group, who is telling us a little bit about how he felt about issues to do with the Jamaican market at the moment, doing business in Jamaica. And as we would have heard earlier, that there's been this uptick in business confidence, and it is Don Anderson, who is a market researcher, who told us that there has been this uptick, but there are still 30% of persons who responded that they did not necessarily feel optimistic about business. And it's that 30% that we're talking to today. Well, we spoke to John of Oppenheimer a little earlier. And we're now going to be moving on to a gentleman by the name of Rob Thurner. Rob Thurner is from a company called Burn the Sky. He's CEO of Burn the Sky. And John would have told us that the technology sector is a sector to look to because of the changes that it has brought for the business sector in the post-pandemic era, but also because it is itself an emerging sector. So, Mr. Thurner is here to walk us through the digital economy issues. As I said, this is a central pillar of doing business. And so he and his clients, he and his team help their clients to assess their digital footprint and their digital capabilities. And he helps them to secure access as well as design ways in which they can use digital technology to improve their business orientation. So, Rob, thank you so much for being with us. We're so pleased you could join us right here on VM Wealth. And we'd like you to let us know what's happening in the world of tech that we need to know as we seek to improve our own business footprints.
Well, Deborah, thank you so much for the kind introduction. Thank you, John, for teeing this up so nicely. So yeah, we heard about growth stocks, didn't we? And wow, here's one to think about, Amazon. Just think about how far Amazon has gone since Jeff Bezos set up the business back in the mid-90s selling books. The business has utterly transformed the fortunes of both Bezos himself and the investors, who stuck with him for 20 years before he turned that little bookstore into the world's most valuable enterprise. I know it sort of fluctuates with Tesla and Apple, but it's right up there. Its growth stock has been phenomenal. A growth stock which has presented a very interesting opportunity for other businesses who have sought to find a way onto the internet, monetize their products in a time when people are less willing and less able to get out there and develop a bricks and mortar relationship with their suppliers. So what I'm going to be doing today, please fasten your seatbelts, because I've got quite a lot to talk you through here in the next 15 minutes or so. I'm going to talk a little bit about the digital commerce landscape. We then move to Amazon and look specifically at how we can win by providing our products and services on the Amazon marketplace. We look at understanding your customer journey. We look at optimizing your search to make sure you're easy to find. We then look at creating great content that's going to get you found and get your customers clicking and buying you. And then we look at brand love and repurchase. So if we could move on to the next slide, let's just take for context, put this in perspective. What is digital commerce? I would argue that we're not simply talking about e-commerce, which is all around transaction over the internet. We're looking at something bigger. We're looking at developing relationships with your customers who are looking to find you on these digital platforms, understand your value proposition, and then provide them with really great experiences so they can easily do their research, make their purchase, and make a recommendation. This is such a fast growing area. And what I'd like to do is just quickly show you some examples of the different digital commerce marketplaces and identify how they differ. So here we can see 4 buckets. We've got your pure plays. These are businesses with no physical stores, e-tailers who buy and own inventory, the likes of Amazon, Ocado, and one in the country I live in the UK here, where you're buying your grocery products, and Chevy there and Zooplus. The 3P marketplace. This is a very important opportunity, and one that you may well know a lot about already from your personal lives. A selling platform where third-party sellers are selling products on your behalf. The inventory is owned by the seller. The selling happens on the platform. We've got Amazon, we've got eBay, we've got Lazada, very big in the Asia Pacific markets, where we do a lot of our work. Then you got the B&M.com. So this is effectively an online version of your store. So Walmart, Tesco's, Carrefour, Coles, these are all businesses which have a bricks and mortar online version and typically a click and collect service. And then you've got the last group, the last milers. So these are basically delivery businesses. These have exploded with the pandemic, businesses that have made a load of money by simply delivering product on behalf of the platforms and the sellers using their platforms. So there we go. We've got the 4 different types of market. But as we can see, it may look a little complicated to know where to start. The expectation you need to have, and your businesses need to have, is that it will take some time to build your presence and to do so profitably. So if we can see the next slide, please. Typically, there is a trough between getting started, making the investment, building your commerce revenues, and then coming into profit, typical of any investment in a new infrastructure and a new way of working. And it's unknown at the beginning quite how long it will take you to break into profit. Let's hope, if you're selling your product on an Amazon platform or another, nothing like the 20 years it took Bezos to turn in his initial idea into profit. But if we move on to the next slide, we can see that there are a number of questions you need to be asking. Who should you be prioritizing? Which platforms should you be focusing on, and which are your priority categories you're going to be selling products? Which retailers have the highest traffic and the highest conversion for products and services in your sector? Which ones provide the greatest degree of collaboration, sharing the risk and the test and learn, and inevitably the data capture and sharing, which makes you better informed to put your product on that retailer platform in order to maximize and to accelerate your profitability? Which indeed are the most profitable, which have the best feed for your product or service, and which ones can help accelerate the brand and product attributes which you are presenting. So before getting started, it's worth doing your homework and figuring out which are the relevant platforms that you should be partnering with. Moving on, please, to the next slide. The key to success, and if you remember nothing else, remember this slide. There are 4 drivers. It's a multiplication of traffic, conversion, order value, and repeat purchase. And what we're now going to do is look at each of these in turn. If we can move to the next slide. So the first tip we've got is to understand your customer and understand the customer journey. Think about it from your own point of view, always a good trick. Why do you go online and what are you looking to do? What products are you looking to buy? What deal is the customer looking to secure before they make the purchase? How convenient and easy is it to make the purchase? How many features can you be building into the experience? And can you make the customer feel informed about their purchase? The better you do these things, the more likely you are to succeed. This research from Nielsen. Moving on, what we see is the businesses that succeed provide a seamless experience that combines three key factors. First of all, educating the customer, make it easy for them to understand what you offer and what the benefits are of your product or service. Make the user experience frictionless, make it easy to buy. Think about when you're buying stuff on Amazon. It is so easy to add that product to the basket, to check out, and then to set up the delivery, and indeed to write a review. And if you're providing a frictionless experience, you're making it easy. Ease and convenience and enjoyable experiences are critical. And when you do this, great things will happen. You're building your brand equity. You're lowering your cost per acquisition because you're getting the right product in front of the right person and their conversion is quick. You're more likely to generate recommendations and reviews and revenue, which gets more repeat purchase, building greater loyalty, and driving higher lifetime value. And that has to be the end goal of any sales and marketing endeavor. So breaking this down, how do you actually do it? Well, I mentioned earlier there are 4 key drivers. So if we can move on to the next slide, please. Optimize search. Now, the chances are that the person has come to the platform from a search, if they've come onto a browser and used a Google search, or they're coming straight onto the platform and they're wanting to do a search on your site. And the same principles that we know from the online world around organic search, in other words, this is not paid for, but it's optimizing the keywords that customers are using, or indeed paid search, these are both relevant in the realm of e-commerce platforms and the platforms that you will be looking to sell your products on. So we need to understand how important this is. On the next slide, we can see, drum roll, if you're not on the front page, you're not at the races. 90% of Amazon users use the search box, 85% of them only stay on the home page, and over 60% share of clicks come from the top 3 results. So you've got to get on the landing page and you've got to get up there high up. How do you do it? Here's how you do it. You need to understand how the search algorithm works. Very similar to the Google algorithm, it's looking for these 3 key areas: popularity, looking at sales, volume of sales. And remember, these platforms are money machines. So if you're selling your product, the platform makes money, your products will be given a strong search positioning. Share of clicks, ratings, and reviews. We need to make sure you're relevant. Is your content matching the searches that people are making? Other factors, think about availability. If you're not in stock, you're not going to be making any money for the platform. They don't want you there. So make sure you've got stock available. Make sure you've got influencers who are driving decision making, and make sure that you're running promotions. And if you've got a promotion, that's more likely to generate sales and therefore your position in the search algorithm. Moving on, please. We're looking for conversion driving content. It's all very well getting eyeballs, but unless they're clicking and buying, you're not nailing it and the platform's not making money. How do we do that? So you thought this was a cleansing product, did you? Well, you're wrong. It's not just a cleansing product. We need to be putting in the detail, explaining exactly what the product benefits are here, using people language, making sure you're describing exactly what the product is. You're putting the ratings and reviews in here. You're putting the stuff like the size of the bottle in there, because that's what people want to know about. and you're making this mobile friendly. So there's a lot about creating content in a user-friendly way, which immediately drive the search algorithm and are going to increase your conversion. Think about images. A picture tells 1,000 words. We all know this. Think of this example, Ben and Jerry's. Do you know 60% of the space in this unit is made up of the image, a high resolution image with a clear brand name, product type, size, and quantity. This is critical. Look ahead at the next slide, and what you'll see is conversion driving thumbnail images. When you're describing your product, don't just stick the picture there, but explain the benefit of the product here. Of course, the image needs to take up more space, but we should be looking at understanding barriers. What's stopping people from buying the product? What are the triggers which are going to encourage them to buy the product, and specify exactly what those are. Here's a great example for Fitbit and an explanation here of the sorts of benefits and value that you're providing, and build that into your product description pages. Fitbit, a phenomenal business, and the benefits very clearly described there. No surprise, Fitbit's been acquired by Google because it's providing such a great service. We want customers coming back for more. This isn't a one date situation. We want an ongoing relationship. How do we do that? We need to understand what it takes to get people to repurchase. And COVID has absolutely accelerated this, expediting the need for subscription models so people can very quickly and easily get more product information, driving subscriptions, and getting them reminders of previous purchases, getting them onto favorite lists, and building CRM, customer relation management programs. Let's have an example of this then. Think about buying a product. We are creatures of comfort. We like to buy easily, and we often buy the same thing again and again. It's estimated that probably 90% of products in my shop are the same each week. I buy the same thing. So make it easy for them to purchase again, to create their wish lists, and to come back and repeat with a single click, rather than having to start all over again. This kind of user experience, I've worked with retailers across the world, designing user experiences which make it very easy to make a repeat purchase with simple user interfaces on the screen, just like that. Moving on. If you can be making your subscriptions easy, make it simple to add a product into the basket and to subscribe for repeat purchase, is going to make it super easy to be on their screen, highly visible, and offering incentives for them to make the first purchase. And if they have not bought the product again, reminders using clever CRM and targeted incentives, a very good way to get them coming back. And you can, of course, be using the same campaigns and the same language in your above the line offline media, and repeating it on the platform to reinforce that offer and that promotion. So we move on. In summary, and I'm sorry it's been such a whistle stop tour, I'd love to take some questions from Deborah in a moment, but our view is there are some basics you got to get right. You've got to win with your priority customers, understand who they are, what they want, and what their journeys are online. We've got to prioritize our investments, so we're spending money on the products which are most likely to sell, and we're putting budget behind our search, our content creation, and our incentives and promotions. And we need to be red hot at implementation. There's no way we get it right straight away. It's about test and learn. I don't expect you to read every word here. I'm happy to elaborate on this if you want to follow up, but there are some clear priorities we need to get in place. First of all, winning with the customer. That means knowing the size of the market, keeping a very close eye on opportunities to reach and engage that audience. Investment, we need to be investing in the assets and the techniques, which I've described already, making sure your product pages, your subscriptions, your CRM programs are really well thought through. And on the implementation, the devil's in the detail. Always think about test and learn, A/B testing of your content and promotions, and making sure that you're using data in order to improve your learnings and optimize your performance. So with that, if I can just move on to one quick slide, if you can just skip the next one. So what do? We're a digital training business and consultancy. We design customized programs working with Google, the MIT, INSEAD, Cambridge Judge Business School, and working with a whole load of global brands in various sectors to improve their knowledge of the digital world and the skills of their teams to be successful in monetizing the digital opportunity. It's been a huge pleasure spending this time with you. I've literally just hit the 20-minute mark. So I would now be delighted, Deborah, if you've got any questions or if there are any specific issues that raised, which we can unpack together.
Thanking Rob Thurner of Burn the Sky. Intriguing, Rob. Hugely intriguing. You actually, it was very comprehensive. So you were very clear on a number of the issues that I actually wanted to ask you about. But there are two things that concern me. And again, coming to our local environment. You're talking about a global market. So if I enter the market from where I am in Jamaica, I'm competing with the world, literally. Small businesses, large and medium businesses within the world. How do I position myself amongst the larger and those organizations that that may be a little bit more agile than myself?
That's a great question. And indeed, it is a global marketplace here. I think the important thing is to understand what your customers, your local customers, are looking for in terms of what products, how are these products best described to meet the needs of the local market, what pricing are they looking for, and to build all of that insight and knowledge about the local market into the way you present your products on these marketplaces. Now, of course, we do have Google there, we do have Amazon there, these global platforms, but there are local platforms too. And I would be looking, we have just done a lot of work in Central and South America with Colgate Palmolive, and we were looking at Rappi, one of the platform providers there. And the focus for them was making sure they were very well represented in Spanish language on the Rappi platform, because that's the local equivalent of Amazon. So I would start by being very good at understanding your local platforms and making sure that you have a presence there, and taking the learnings onto the Amazon platform, but targeting people as you can with Amazon with a geographic fence. So you're immediately reaching local users and using the images and using the sales techniques and the pricing and knowledge for them before we focus on the global market. And we can geo-target using the Amazon platform.
Right. You know, these technology platforms seem to be the gift that keep on giving. Because even as you speak, you're also talking about other markets that we can be developing within our own sphere. We can be developing our own platforms to measure. We can be developing content development platforms. And I wanted you to talk to us too about the importance of the importance of the content that you develop for your own platform, the level of photography that you use, the copy that you write, making that copy accessible, bearing in mind that these are now new markets that are emerging. These are new businesses that are also emerging, in addition to the retail platforms that you speak of.
Yeah, and this is a really important question. Your own website, you control. You control how many people come to it through the investment you make in your search and your advertising. You have control of the landing pages and the promotion that goes onto those pages. So it's essential, if you are a physical retailer, or if you have a face-to-face interaction with your customers, make sure that the best aspects of that and the best content find their way onto your own landing pages, that they're easy to find, easy to navigate. And you're absolutely right, Deborah. We should be thinking about using photos. We should be thinking about using videos, because these are the media channels which can tell a much richer story and convey our brand personality in our own way on our own pages. So that's a really important point you raised there. It's not just about being big on Amazon. Being big on your own pages is critical. You own that media, and if you've got a strong brand, people will be coming to your website. Do the very best you can there before, I would say, spending time on Amazon. Now, Amazon, the advantage they have, of course, is they've got a self-made market with many millions going there, but they've also got a ton of competition there, including own label products, which make it less easy for you to convert because there's more mouths to feed at that party.
I could speak with you for hours on this matter, Rod, but thank you very much for joining us on VM Wealth, where we're talking about new business models and the new business normal. We're going to be moving on to our own Jamaican business people who are sharing with us information about their perspectives about business and doing business at this time. It's a very challenging period, but a period in which there are a number of opportunities. And so I'm going to be joining Donette Prendergast of Prendy's on the Beach, and itself a wonderful cultural product right here in Jamaica, and she's going to be talking to us about doing business. Donette Prendergast, as we've just spoken with Rob Thurner, who is a digital transformation consultant, executive education specialist, author, and speaker. Donette, let us know what you're thinking about business.
I'm Donette Prendergast, owner and operator of Prendy's on the Beach, located at Helsha Beach, Portmore, St. Catherine. Prendy's business outlook is to, one, to keep our doors open, to find strategic ways to improvise cost of our meals and different meal options, affordable, and to ensure that everyone is able to come in and have a meal. As you know, we have a new strain affecting the world. Prendy's cannot afford to allow this to cripple the Jamaican brand Prendy's Seafood. The economic downturns are, yes, upon us, but we will have to find ways to overcome these obstacles. Yes, we would like to continue serving you face-to-face. However, because of the pandemic and what is at hand, we are now online, which gives you an opportunity to stay in the convenience of your home, offices, wherever, and make your purchases online. You can use the WhatsApp, you can do online ordering, and your meals will be delivered to you safely and on time. We are encouraging persons to use the online platforms. Let me take this opportunity to tell you about ENDS. ENDS have opened a door to a lot of small business, medium businesses, and it has been a great help for us, Prendy's. During the curfew hours, we are able to serve you again at your own convenience. There are plans being done as we speak for the 2021-22 outlook of Prendy's going forward. One of the most important things is that we won't do anything that will not be beneficial to our customers. We take you as customers, family, and friends, and because of that, everything that we do, it revolves around you. Prentice is a household name, noted in the community, noted in the area that we are, and here and abroad. Other companies and other businesses, we have been all affected in some way or another by this pandemic. What we have to do is to work together, pull all our resources together, and make sure that at the end of this, we are all standing together. I also want to take this opportunity to employ my fellow Jamaicans, my brothers and my sisters, go and get vaccinated. It's your answer. One thing I can tell you is that throughout this pandemic, we will stand strong because we're standing together as one. Brand Prentice was here before the pandemic, and by the grace of God, we will be here after the pandemic.
That was Donetta Prendergast from Prentice on the Beach, and she's been, one of the persons who's been sharing with us her perspectives on doing business in Jamaica at this point. We're right here at the VM Group's Wealth Talks, and we are talking about new business normal. And our hosts today, we have our hosts today at VM, are two really knowledgeable people about issues to do with finance and money. First of all, we have Megretta Hall. She is the manager of foreign exchange trading, and she's going to be talking to us today about the integration of foreign exchange trading in terms of in the ways in which we do business. And we also have Dwight Jackson, who is the Assistant Vice President of Capital Markets. And we're going to be talking about the capitalization of our businesses as we move forward. And as I'd said earlier, Megretta, welcome. You should be welcoming me. I'm in your home. All right. So we're going to be talking about foreign exchange trading. And you have a presentation for us that I would like for you to share with us. But I want us to be very, very clear. I want us to break it down really simply. When we're talking about foreign exchange, what we're hearing most of all is the movement in the dollar. How does that impact us? How does that impact us as business people? Some of us see see the prices rising as a result of it. Some of us see that because we have investments, that things are looking really good for us because we have US dollar investments. But it's a mixed bag. So your job must be really difficult, to kind of set the balance.
That is indeed true, Deborah, and thank you again. So foreign exchange is big business globally and locally. As you said, there are good times and there are bad times depending on which side of the foreign exchange sphere you are, whether the demand or the supply. Currently, what we're seeing is an uptick in demand based on the current atmosphere of the market.
What we're saying is that more businesses require more foreign exchange. Right. Okay.
And if I just jump in to share my little presentation with you to give you a synopsis as to where we were pre the pandemic to where we are currently, and how it is that we can help to guide you into how to best prepare to meet your foreign currency needs.
Perfect.
It's not just about the selling of it, there's also the buying as well.
Okay.
So this is our last 3-year comparison as the month-over-month volume movement. What you'll be seeing here is for the pre-pandemic period. We did an average of approximately 630 million, focusing mainly on the US dollar, which is the most common currency traded locally. So per month, we were doing 630 million. When the pandemic hit 2020, that volume moved up to approximately $950 million per month. So while the rest of the economy contracted as a result of the pandemic, we saw increased movements in terms of the volume of currencies that are traded locally, specifically the US dollars.
What would have accounted for that?
There are opportunities that came out of the pandemic. There are needs that were developed and other reasons that persons would want to trade more into US dollars than any other currency locally. But just to share with you again, the central bank We saw the intervention of the central bank in the market where they're providing liquidity during periods of high volatility where demand outweighs supply. We have seen the central bank intervene a number of times up to August 4th. This is actually a 42% increase over the corresponding period last year, an indication again that things are moving irrespective of the pandemic and what contractions are occurring in other areas. But there are sectors that are growing and are booming and are engaging in trading activities. And the central bank saw it necessary to intervene at particular times to supply the liquidity to these businesses as the bank specifically decided who gets the currencies that they intervened with. Mainly, end users as defined, businesses that have US dollar liabilities to pay. This was also very proactive of the bank, I should say, in ensuring the containing, the reduction, should I say, for flight of capital to ensure that it's a direct need that is being satisfied.
Absolutely.
And as I said, up to last year, for the same corresponding period, the bank did 175 million, approximately 42%. Again, showing the need for the currency traded locally.
It shows that the process is being managed.
It's managed.
Being adequately managed.
So while the bank's target is inflation-based,
Right.
you can also understand the need to control a rapid decline in dollar. As we see here, this has been the movement, the month-over-month movement based on the BOJ's weighted average sell rate from January. As a matter of fact, I have it there from December to show you where we started on January 3rd at 142.65. And as at the end of July, we were at 154.59 as the benchmark weighted average rate for the selling of the US dollars. So we're losing 12, almost approximately $12 to the Jamaican for the period. So, and this is our inflation movement. Come on. And this is not our inflation movement. This is actually the movement, the appreciation and depreciation of the local currency. For me, this is important for our businesses locally, as we can see periods of high volatility and periods of low volatility.
Yeah.
So for our businesses, they need to know and pay attention to the movement in order to determine when do we go into the market, when do we buy, when do we sell. Those are critical decisions for businesses to make.
Right. John spoke to us about issues of volatility,
Right.
and being able to be clear about how volatility of different types affect our businesses. What I want to find out from you is help us to read this graph.
I certainly will.
Help the average business person who has a decision to make, whose issue is payroll at the end of the month, and it does not have the added capacity to be involved in, who doesn't think they may have the capacity to be involved in foreign exchange market. I want you to break it down for us, to say what does this mean for us and how can we get involved?
Sure, Deborah. What this means for us, let's start with January. We are recording a depreciation in January for 1.56%. At the period coming towards December, we see a slowdown because we're all on holidays. So most businesses have satisfied their needs. Come January, we're strategizing as to what approaches need to be taken. We're starting to position ourselves as to how we move forward. So with that said, there is generally an uptick in the need for US dollars.
Right.
Coming into March, we're seeing the Jamaican dollar playing a very vital part in that we have our statutory deductions to settle.
Right.
So with that said, there would be a need to, if you are in the position for you to be accessing Jamaican dollars, some persons, some businesses would be looking to reduce some of their US dollars holding to satisfy their Jamaican dollar debts.
Right.
So it is important for us to know the cycle. As you can see, it's pretty much a cycle. So businesses need to be aware of what cycles occur at what point to determine when is the best time for them to do what their needs are, whether it is to buy or whether it is to sell. So we at VM reckon the world has learned to live. We're coming to a stage where we have to live with this pandemic. There are choices to be made, and there are opportunities to be had. So we're about positioning ourselves to take advantages of the opportunities that exist in order for us to grow our business. We have seen the eradication of some of the GDP, but then there's businesses that are now coming up to replace that kind of activity. Industries are also poised for growth. We just saw the cruise ship that came back in.
Right.
So our protocols have to be in place for us to be able to live with what is currently happening until this vaccination proves that it can eradicate the whole viruses and all the various strains that have been developed or recognized.
Rob just
Right.
spoke to us about technology and some of the other content areas
playing
that
a,
are
playing a
um,
major role in these activities. Historically, businesses would position themselves to take advantage as the need arises. We are in an era where we have to be moving away from that. We are now having to look at planning, preparing, timing, in order for us to not be left out in the cold. And this is why VM is important to businesses today. As we are not predominantly known for foreign exchange trading, but I'm here to tell you, we have a team of learned traders that are able to craft and to advise you in how to prepare to meet your needs in your foreign exchange, in the foreign exchange market. Right? We have various activities that sets us above the rest. You know, we do quick turnaround times in our settlement. What we recognize is we know your need. We know your need, and we know urgency is something that plays a major part. So you've got a bill to settle. We can't tell you we're going to be waiting until everything comes together, then everybody's bills get settled at one point. So we show our appreciation to you by taking your business and doing as you have requested of us in order for you to meet your obligations within a timely manner.
and so we're talking about things like even the purchase and payment of software. You may be in the kind of business that you have
There
to
you
be
go.
paying using a credit card or whatever means
There
to
you
pay for software over a period of time, or to pay a bill in US dollars or in pounds or in some other area. You will be able to help them to manage that payment process.
Let me tell you why you need VM for these purposes. And I'm glad you touched on it, because US dollar may be the most popular currency traded locally, but we do trade in Canadian, GBP, and US dollars. And we are able to settle your liabilities, wherever you want in the world, we're able to send that payment for you. We give you an ease of doing business with us. We have 16 branches spread out locally, and we're all there to service you and to ensure that your needs are met.
No, I was just going to say, it just kind of popped into my mind that sometimes when we think about FX trading, we're thinking about the large organizations that have large obligations. But even as small business owners, we may not necessarily think of paying for your Google Suite or paying for your software every month as a foreign exchange transaction that needs to be managed over a period of time. And this is interesting to learn.
That is indeed correct.
Yeah.
Small businesses have needs just like large businesses. We are not in the business to tell our members, because at VM you become members. We're not in the business of telling you no. In periods of high volatility, we're not saying, we're not able to satisfy what you need. That's not what we're about. Victoria Mutual has always been big on nation building. We respect our businesses locally, and we know we need to play a part in order for our business continuity. So as small as that transaction is that needs to be settled, it could just be a school fee.
Yes.
It could be as small as a school fee. VM is there to meet and satisfy your need.
Yeah. I think it's important that we see some of these services as accessible, because very often, as you know, we've been saying all morning, that sometimes it kind of flies over the head of many of us, and that's not what we want. We want to ensure that everybody
Indeed.
can come within the net. This is you wanted to come to
Indeed.
take
And
us through?
Well, we offer competitive rates compared to other parties. As I spoke about, we have quick turnaround time in our settlements. It says JMD settlement, but it happens for both the foreign currency as well as the local settlement. Because if you're selling to me for, just as you said, for your payroll, you're needing your funds within a timely manner in order for your staff to be paid. We appreciate that, and we make sure your timing is quick and easy in order for you to meet your obligations. There's several complementary offerings that we have, and my colleague Dwight will touch on some of it from the cap market side of the business as to how it is we can tailor need, because some of our small businesses we recognize may not, even though we showed the chart of the volatility between the movement, the month-over movement in the cost for the US dollar to the Jamaican dollar, there may be some businesses, small businesses like yourselves, that is not able to fund the activity at the appropriate time. Oh, so March is a good month. I should be looking at doing business during March, but the liquidity may not be there on your side. So we have complementary offerings to be able to tailor to your need in order to satisfy your requirement at that particular time.
But at least if you know, you can plan towards March.
There you go. Planning is very critical in the process. As I said, did we budget for a $12 movement this year? I'm not sure any of our businesses did, you know?
Yeah.
It's $12.
People have been saying it for a while, though, that there would be some form of movement in that direction.
It is anticipated. It is anticipated, but when it moves so quickly,
yes,
then is when you may not be able to recuperate.
yes, a shock to the system.
Shock to the system, indeed. So we want to help you in the planning process. So as our traders, we're here for you to talk to you, for you to tell us what it is that you need, and then we can tailor and deliver as in accordance with your expectation. One of the beautiful things about working with a mutual company is that we keep our fees very low. So there are standard fees across some areas, but when we compare ourselves to the competition, we stand in a very good spot. So we're saying we have more attractive and lower fees. Come talk to us at VM. And it works for the selling side as well. From where I sit, we service a lot of the broker market. A lot of the broker market is serviced from VM's supplies. We're saying to our small businesses and other enterprises, cut the middleman, come directly to the source, because we have multiple sources of supplies. Our 16 branches earn in foreign currency, plus our international branches as well, that is able to fund a pool of resources in order for us to meet your demand. And that's one of the reasons why we say to you, we don't say we do not have. We're not going to tell you you have a demand for 20 and give you 5. We do not do that. We will find it for you. We make it happen at Victoria Mutual, right? And that's why we're able to offer you competitive rates, because of our supply chain, right? And it also makes us very visible during periods of the high volatility. You can count on Victoria Mutual to satisfy your foreign exchange needs.
Okay.
There is the issue of forward contracts. As we said, the pandemic is causing us to think outside of the box, to create new ways to remain sustainable and profitable, right? So no longer, as I spoke about, are we waiting on just the opportune moment to buy what we need. We have now in place forward contracts. So you may not have the resources now to buy, but you can plan for the next 3 or 6 months to say you should buy. And you can talk with us at Victoria Mutual, and we can engage in a forward contract where we agree on a price, and we'll be able to satisfy that for you at that point in time, irrespective of the movement of the currency when it arises.
That's important. That is hugely important, especially as businesses try to project into the future. This is wonderful.
Correct.
All right. Well, you know, I'm heartened. I tell you why I'm heartened. Because I feel as if this is something that I can understand clearly beyond, you know, all of the various issues. And we're gonna move to the capital markets now with Dwight. Sir Dwight. How are you doing?
Fantastic.
Good. Dwight Jackson. You are you are Assistant Vice President of the Capital Markets, and you're going to be telling us exactly how we can be doing business with VM with regards to investment and capital for our businesses. Tell us how that works.
Okay. Thank you very much, Deborah. So, as Deborah said, I'm Assistant Vice President, Capital Markets. But I would like to see and describe ourselves as a corporate finance outfit. And the reason for saying that is essentially we are in the business of not only raising funding for our clients, meaning raising capital for our clients via the capital markets. That's when investors invest in a bond or they may buy shares in a company via a IPO or additional public offering, as we're seeing it now being called, or a rights issue. We also do on-balance sheet lending, so we do business loans. And we start with as little as $50 million for our clients. As Meg says, we are the wealth management arm of the Victoria Mutual Group, which has been in operation for over 140 years. And we have been serving our clients very well in this time. We are member focused, and we try to deliver products and services that deliver value to our members, which include not only retail clients, but of course, corporate clients. And sometimes corporate may seem too big for some businesses, but it just simply means business. So we have a lot of business clients on our books, and we try to serve them in an efficient manner. And of course, we will get into some of what I describe as the new normal for business and raising financing. But suffice to say, we also, like Meg says, try to be competitive in our offering by making sure that the fees that we charge, especially our clients, reflect as much. In some instances, they may even be waived because you have been a valuable member of the group for years, and just like you have helped us to have had success, we'd like to be able to return that kind of favor to our clients.
Okay. So walk us through how it works here at VM Wealth Management.
Thank you. So, as I've said before, we are a part of the Victoria Mutual Group, which have been in operation for 140 years. The society operates for the benefit of its members, so whatever we do, we try to make sure first and foremost we're delivering value to our clients. It's not just a bottom line. We are in the business of growing our clients' business because we believe that with the growth that happens on the client side, we will grow. So it's a mutually beneficial relationship that we try to form. And we think based on our legacy of doing business, we have the track record to stand on as far as having done that over the years. Victoria Wealth Management, Mutual Wealth Management, has been in operation since 1994. We're a wholly owned subsidiary. You can move to the next slide, please. We're a wholly owned subsidiary of Victoria Mutual Investment Limited, a company that is listed on the Jamaica Stock Exchange, and also recently got a Carey Chris investment grade rating. So we're a known quantity based on the fact that we're listed. We have our quarterly disclosures. You get a chance to see our financials, or we have been performing, what we've been doing pretty much with your money. And we are also a reputable business as rated by Carey Chris in assigning us a Carey Chris investment grade rating. We're a part of a group, clearly. Meg, you spoke to not too long ago, touch on FX. That's one aspect of what we do. We also have the money services, which a lot of persons are familiar with. We have BCIC, which is a part of the group, which helps with insurance. So we are pretty much, I would consider, a full-service financial provider that can meet just about any need our clients may have when they come to us. But while we're at it, our focus right now is to speak primarily about accessing capital, especially in this current environment. And that's what we do. So we are Victoria Mutual Wealth Management, and we provide our clients with service in the form of advisory. So you would recall you have persons who may say they are brokers, for argument's sake. So we are an advisor. We offer our clients ways in which they may access capital. We look at their current financial setup and make recommendation in terms of not only what kind of capital to raise, the timing when to raise capital, how they may leverage different aspects of their business to get the best possible rate on those capital raises, are things that we do as part of our financial advisor services. We're kind of skipping back and forth, but what is on screen here is what I alluded to earlier by saying that we're more a corporate finance outfit, and we sort of break it out by saying we have two sub-units within the corporate finance unit. One unit that raises capital via the bond market, so people are familiar with that word terminology. What that means is that if a business wants to raise money or borrow money, they can go to a bank and the bank says, okay, I'm going to use the depositor's money and lend you, right? Banks in general are regulated by the BOJ, and so they have to be careful how long they lend for, and they usually don't lend without collateral. In the bond market, it's a different market, and it's more, the regulator there is the Financial Services Commission. And there is a little bit more flexibility for companies seeking to raise financing, where they would be more likely to be able to get investors that are willing to lend to them on an unsecured basis, or investors that are willing to lend to them for longer duration. So you recall earlier John touched on there being 10-year, 20-year treasuries. So you find that commercial banks in general typically don't go beyond 10 years. Most would tell you that they probably don't even go beyond 5 years. But some clients, based on how what the nature of their investment is, need a much longer duration. They need to go 10 years, they need to go 15, 20 years, because they're investing in front of the cash flow. The cash flow is not going to come until much, much later down. And so they can't afford for a 5-year bond or a 5-year loan. It's just going to be maturing too early, and they would not have started to generate the kind of return on the investment in that time. So, so that's
who qualifies for this? How do you qualify to access this sort of financing?
So that's a very good question. All right, so as I said, we raise financing for our clients from as little as 50, and there's really no maximum. The maximum is going to be a function of the market, the capital markets, and its ability to lend that amount of money to you as a single borrower. So somebody looking to borrow, say, 50 million, we would not structure such a transaction as a capital market type transaction. We would not do it as a bond, because there are certain fees and services that come with structuring a transaction as a bond that is going to be too costly for somebody seeking to raise that small amount of money. And so we do it as a loan, right? To get a loan, I mean, what I would say is that a business that has at least 3 years of audited financials, you know, is tax compliant, clearly registered to do business in Jamaica is important. Ideally, a business with a board, but if they don't have a board, we can work with them same way because of the amount that they're borrowing. They also would need to provide us with usually projections of pretty much what that demonstrates for us is how they are going to be able to repay us. So we usually ask for projections in line with the length of the facility. So if you're borrowing for 5 years, we ask for 5 years projections. Yeah, so those are some of the main things that a business needs to provide us with. So the financials are very important. The company, the legal documentation, meaning the articles that show that the company is established, the tax compliance certificates are all part and parcel of what the company would need to provide us. Once they do that, we usually put together a term sheet. What a term sheet does is pretty much outline the terms and conditions of what any facility we would arrange for you or would help you to get capital from. The term sheet summarizes what those terms would look like. So you will see the rate at which you're borrowing, the duration at which you're borrowing, the amount you're borrowing set out in the term sheet in a summarized way. All of that will be in a final document that would likely to be a loan agreement, or in the case of the capital markets, that document would be likely a trust deed supported by what they call a global bond.
Okay, wonderful. So the issue of collateral, there may be the business person that may be limited in their ability to come up with collateral. What happens then?
Yes, so as I said, clearly we are managing monies on behalf of our clients. So you invest in VMBS, whether it's in a fixed deposit, or you may invest in Victoria Mutual Wealth Management, whether through a unit trust, or you may be a pensioner, or you may put some money on short-term funding like repurchase agreements. Those are the monies from time to time that will also go find its way into an investment. And that investment can be in the form of a loan, as I said, or it can be in the form of a bond. Now, I understand the question of why can you get financing without collateral? Of course. Now, but it's always going to be dependent. So companies that are seemingly what we consider low risk are more able to get that kind of allowance where you can borrow without providing any kind of collateral. A company that would be considered low risk is a company that probably would have been in operation for years, would have had a demonstrated track record of having taken on debt before and serviced it per the terms of the debt, so they have a good credit history, we would say. Persons who have a CARICRIS rating, for example, so if you were to go and get CARICRIS to come on and give you a credit rating, and that's a good credit rating. A good credit rating usually is anything above BBB minus, which we would consider investment grade for the region. So if you are able to demonstrate that you have had the track record, that you're able to get a CARICRIS rating, then of course you can access financing on an unsecured basis. It's usually clearly more difficult to get there, but there is the possibility, and what we have been doing is actually helping our clients to not to tie up their capital, or tie up their assets, I should say, by trying to get access to unsecured funding, by either being able to demonstrate that track record of having serviced debt in the past, or be able to go and get a rating from a recognized rating agency like CARICRIS.
Okay. Intellectual property as collateral. Both Rob and John spoke about the new business opportunities that exist in the digital sphere. A lot of that involves maybe content creation and some other areas. How far along is VM in terms of recognizing collateral as intellectual property as collateral?
Yeah, I mean, it's certainly something that we're looking at. As you said, we're in a new business normal now where the traditional means of doing business don't necessarily hold up in every instant. Not saying that it have all been thrown through the window and we don't do business the traditional way anymore. But the traditional way of going about things, as we have seen, have been totally disrupted. And businesses now that can demonstrate, whether through intellectual property or some other ways that they have the capacity to provide their services conveniently, are where things are at. And
so
collateral that can be valued.
Okay, it's a demonstration of consistency in addition to the intellectual property.
Correct.
Right.
So where I was getting at is intellectual property has a value. And once that value can be demonstrated, then of course it can be used as collateral. The question now becomes, how do you demonstrate the value? Right? So usually we are professionals in a finance field, and we're unfortunately sometimes very narrow in our focus, meaning we know finance very well, but we don't know the arts very well. And what that means is that you may have some intellectual property that can deliver significant value. Let's say you're a creative and you have,
a TV show.
Exactly. And there's a lot of value that you ascribe to it. If we were to look at it, we would probably not be able to see that. So sometimes we need consultants, and that's what I would say to business. Remove what would consider a perceived bias by getting professionals outside of yourself to weigh in on this. So like if somebody come to us with a property and they say they want this property to secure a loan, for argument's sake, we would say go and get an independent valuator, right? And we have valuators on our list. I think that's the next step for non-traditional collateral being put in this space, meaning you get somebody that appreciates it and somebody that has the capacity to say verify this value, and we can then as a banking institution take that on and say, okay, based on this value, this is what we can lend against it.
That's an extremely forward-thinking approach to the
Yeah.
process, because there are a number of organizations right now who are facing those
Yeah.
challenges. That's what they have to offer
Yeah.
as collateral. So you wanted to take us through some more of your information?
Yeah, man. So on screen, what we're showing you is some of the services that we offer as a corporate finance unit. So as I was saying earlier as well, we advise our clients. So sometimes this is all a client may need. And what I mean by that, so from time to time, a client may reach out to their attorney. They may reach out to their tax expert to get advice based on what they're doing. And I recommend that businesses also have a financial advisor in their corner. You don't want to wait till the pandemic hits, that you're rushing to get financing, and you know, if you had an advisor in your corner, you would have been better positioned to weather this kind of storm. And listen, even if you have every liquidity in the world, you may still have been significantly affected, right? Because as we see, some businesses have just been totally shuttered based on how they have structured. But there probably was an opportunity missed by some businesses not having that kind of conversation, having that person in their corner to say, well, I don't think you have enough liquidity in the event that something of this magnitude were to hit, so that you can pivot. Because we're talking about the new normal, being able to recognize that things aren't going to all be the same anymore, and so I need to pivot. I need to be able to offer my services the same way, but where people are. So they are not coming out, they are staying at home. Can I continue to deliver my service? Which means that you need capital. Now, some businesses would have been positioned to be able to access that capital, and some would not have been. And a lot of that comes down to, did you have somebody sort of explaining to you the importance of your balance sheet being structured in such a way to buy you the time needed in the event of a worst case scenario?
And you provide this advisory service?
Absolutely.
Absolutely.
Yes. So we like our businesses to stay close. We like to stay close to them, and we encourage businesses to have a financial advisor, just like you have an attorney, a tax expert, etc., in your corner. The other point is that we arrange financing. So what we mean by that, as I said, we're a corporate finance unit, so we can either lend you from our balance sheet, so we can provide a business with a loan, just like any bank, or we can go into the capital markets, because you say to us, we want something long-term. We want a 20-year structure. We want it to be unsecured, and we want the payment. We want all the principal payment to be on the back end. We want the first 10 years to be interest only. Usually you find that kind of financing not necessarily being provided by the bank based on how they are regulated, and so you have to go to the capital markets. Who are the people funded in the capital markets? There are pension funds. There are asset managers that manage unit trusts, and so forth. So these persons have the wherewithal to invest in a 20-year, 15-year, 10-year type of security like a bond. So we arrange financing via that medium, and we also arrange it via the Jamaica Stock Exchange, where the company may go there and raise capital via equity in an IPO, a rights issue, or what we are calling now an APO. Or some people may just go there to sell shares in a business. They're not raising any capital. They just have their business that they would have built over the years, and they want to take out some of the money that they would have invested and redeploy that capital. Next thing we offer is brokerage services. So when we structure a security, we broker it, we distribute it. That's like selling it. So that's the next step. Having decided that you're doing a bond, it has to be distributed to these pension funds, etc. So that's the brokerage service. As I said, we also lend. So a client may come to us and say, I don't want my business to be all over the place. I don't want to have to be dealing with, 60 or 600 investors in my business. I want a loan. I want it to keep it private between yourself and I. And so that client may be better off you structuring it as a loan for them. So we actually lend from our balance sheet for those clients. And what we mean by underwriter, Meaning a lot of time clients want to raise money, especially in the capital markets, but they want the assurance that if you say to them that you're going to the market to raise $10 billion, that they will get the $10 billion. Because if you know business, they want to start to make commitments. They want to either start to spend that money as soon as you sign the agreement that you're going to market to raise $10 billion. So they want an assurance that you're able to deliver on that commitment. So what we would do is offer to underwrite, meaning that we're giving you assurance that we will raise the 10 billion. So if we go to market and the market takes up only 5, we will write you a check for the other 5 so you get your 10 billion. That usually comes with a fee, of course, but that's what that means.
Okay. So there's one-stop shop.
It's a one-stop shop.
Right here at VM.
Yes.
You can do the capital market work and you can do the foreign exchange
Yes.
Information. And so we want to move now to someone who is affiliated with VMBS, who knows how VMBS works, Mr. Cecil Foster, who is the CEO of Fosrich Group of Companies, and he's going to provide us with his perspective in terms of doing business. When we come back, we're going to wrap up. We're going to have a little chat about, close off some of the issues and speak about how we can bring more people to wealth through the VM group. So we're going to go now to Cecil Foster, the CEO of the Fosrich Group of Companies.
My name is Cecil Foster, and I am the CEO of Fosrich Company Limited. The outlook for business at Fosrich for the remaining portion of 2021, I would say, is positive. We know that there are challenges in the market, of course. There are tremendous disruptions in the supply chain. There are concerns that is just out there about the virus, the COVID-19, and there's also the fear that is gripping people. However, what we have seen at Fosrich is that opportunities have opened up themselves. We have strong supply chain management systems in place, and that has helped us to be able to supply our market. We do have committed staff members, and the market that or the industry that we are in, the construction and energy and lighting market, seem to be very buoyant, and investments are being put into the creation of jobs and new buildings and renovating the space that people occupy. And so I think we are in a position to be positive for the rest of 2021 and beyond. We know that anything could happen. We are in the hurricane season and so on. And so we are very prepared for some of these incidents that might happen so we can be able to supply our customers. For instance, even our PVC manufacturing, where we manufacture the Solid brand, we are very much ready with about 3 months manufactured inventory so we can withstand some level of shocks if they should come and the market demands product. We are going to be able to supply them. We are also taking the opportunities that have presented themselves in this time of uncertainty, because we are still investing in new businesses, in new line of products, and we are just trying to be there in this space with the customers to let them feel comfortable that we are able to do it and they are experiencing it. And so we figure we should be able to ride the storm if things remain as they are in 2021. 2022, I think that year could be a very good year also, but we will make that prognosis a little later in 2021. We are very positive about what is going to happen for Fosrich in the next couple of months before the end of 2021. We are very pleased to tell you that today, as we speak, we have the consultant from South Africa at our newly built Fosrich Fulfillment Center, where the implementation of a warehouse management system is taking place. And this is going to be fully electronic, fully digitized warehouse. So the goods coming in will be tracked, barcode, and will be tracked when it is stored, and it is going to be picked electronically, and also is going to be transferred to the trucks delivering through the same kind of a system. And so we are very pleased about that. That is the first phase of the development that we are doing at 76 Moulins Road. The second phase is where we are building a 110,000 square feet of superstore. That's going to be a complex that has banking facilities, recreational facilities, food, and also our head office will be at that location. We are hoping to have that construction be finished and ready for use by the next 15 to 18 months. We are very pleased also to let you know that Fosrich is online. We are digitized and we are online, and you can find us. So even if you wake up one morning and you don't want to get up and go on the road, maybe a Sunday morning, maybe any 2 o'clock in the night, you can go online, fosrich.com/shop, and you can get your products that we have here at Fosrich. So we are putting ourselves in a space where we can reach the customers where they are. We can help them to find their solutions and let them stay safe. And so we have great team members who are committed and have been working tirelessly to get all of these new projects in place so our customers can feel satisfied doing business with Fosrich. And so we are looking forward to a good rest of 2021. And beyond that, we think there could be some level of additional positivity that could come into the economy. But I just want to say that don't give up on Jamaica. Let's try do our absolute best to make sure that we are looking for opportunities that present themselves so we can grow this country.
That was Cecil Foster, and he is the CEO of the Fosrich Group of Companies. And as we would have heard, his perspective on doing business in Jamaica. We are with the VM Group, and we're doing Wealth Talks, and we're looking at new business normal, and we're going to be closing off this discussion. Want to thank our two overseas guests who were with us earlier, John Stolfus, the Chief Investment Strategist at Oppenheimer, and Rob Thurner, founder and CEO of a company called Burn the Sky. They dealt with both the global business environment, and then we spoke about the digital transformation of retail in Jamaica. Now we're speaking with Megretta Hall. We're closing off this segment. Megretta Hall, who is the manager of foreign exchange trading here at the VM Group, and Dwight Jackson, who is assistant vice president of capital markets in terms of wealth management here at the VM Group. Want to just speak with you, Dwight, about alternatives. Tell us quickly about alternatives to financing our businesses in this new normal time.
Thank you, Deborah. So that's important because, as I understand, some persons or some businesses are averse to debt, or they may be averse to selling a significant portion of their business to raise capital. And what do I mean by that last point? Is that some businesses, to get capital without taking debt, they will need to sell equity in the business. Now, a company is going to invest equity in a business subject to a valuation. Now, having done a valuation, the company may say they would invest X amount of dollars for X% of the company. that sometimes can be 20%, sometimes it can even be 50%. That is off-putting to a lot of business that feel like they have been putting in a lot of effort to get their business to where they are, and where they're going, the valuation may not actually reflect that as well. So they would have sort of refrained from raising the needed capital, and as a result, they may be suffering, or their growth may be suffering or stagnated as a result. But what we see with a lot of these businesses is that there are alternatives, methods that may be pursued. A simple alternative could be, do you own assets that we consider are non-core to your business? Meaning, do you own significant real estate that you own for just owning assets? I realize in Jamaica we like to own things. You know, it's part of our makeup, and it's the way we get to feel independent in a lot of ways. But is that asset, by owning it, depriving you of capital that you could have redeployed to make money? In other words, you may own a large warehouse, or you may own a large piece of commercial asset that is really just there for you to sort of occupy a space, whether it's for your equipment or for your employees. But it's very valuable, and you could have, you know, raised money against that. So not to borrow, because you're adverse against to debt. But what you could do is to sell that asset. You could say, well, this is a non-core asset. I don't need this to make money. This is not part of my operations. So I sell that warehouse, or I sell that commercial building. I get 300, 500 million, or $1 billion, whatever it's valued. I take that money and I put it in the core operations of my business that is generating 15, 20% per annum. And I'm able to grow my business significantly because as a result of that capital injection. But because I need the building to house my equipment, or house my inventory, or house my employees, I enter into a long-term lease, a 10-year, a 15-year lease.
So you don't lose the use
So-
of the building,
exactly.
but you are no longer the owner of the building,
Yeah.
but you get the benefit from the value of the building.
Exactly.
That sounds
and so you
win-win
don't,
to me.
and so you don't have to take on the debt if you're averse to debt, and you don't have to sell your company because you're saying, well, I don't like to give up ownership. But you get access to capital immediately, and you get access to the building. And what you can structure the lease agreement such that you always have the option to renew and continue the lease. But that structure.
But doesn't that kind of make you a little insecure in terms of the ownership of your own building? You know, this is yours.
Well, of course, there's a risk that the owner could say they are going to, at the expiration of the lease, they're not going to renew you. But I'm saying you can structure the lease such that you have the option, once you have been a good tenant, to extend the lease, right? Because, I mean, if the table or the shoe was on the other feet and you own a building that somebody's not paying you the rent, you wouldn't want to extend them. But if you're a good tenant and you're paying your lease on time and in full, then the argument could be then what would be the problem? So if the term is set up in such a way that at the expiration you have the option for another 5 year, another 10 year, you can do that. Now the other point to that is, having taken that money and deployed it in the part of the business that is generating the most return, you may be so big that in 15 years you can go back and buy your own real estate. You can even buy in a better location. So all of a sudden, you know, you're looking beyond what you would have given up 15 years ago. And I think that's how some business need to think.
Looking into
you
the
know,
future.
Yes, because we have this thing of, as I said, of ownership. We'd rather own 100% of 100 million than 50% of $1 billion.
Yeah.
And we need to get out of that mindset sometime so that we can get out of the way of the growth of the business. Because business growth is important. I mean, you heard earlier John spoke about investing in technology, investing in consumer discretionary. All of those assets come from business raising capital. If a business is not raising capital, whether by a borrowing or, you know, getting money via equity, none of those opportunities to invest in industrials, invest in consumer discretionary doesn't exist.
Yeah.
So it not only do business create employment, but they create wealth.
Yes.
By borrowing or raising capital.
And
by the
creating wealth
capital
is
market.
what we are about.
Yes.
Negrete, tell us now about accessibility. close us off by letting us know how accessible VMBS is. Can I walk off the street with my hairdressing business? Can I walk off the street, the owner of a barber shop, and come to you and say X or Y in terms of opening an account, in terms of any of the services that you provide for us here?
Most definitely you can, Deborah. We've got 16 branches positioned across the island. We are inviting you to walk in. Have a discussion with our financial service specialist. Let them help you in the process of opening your account, making it as seamless as possible. And from that, you'll be able to engage in the discussion about how it is we can satisfy your FX needs. At VM, we do not dictate, we discuss. That's why we are able to negotiate with our members in order to satisfy their need. Come, let us take care of your foreign exchange needs at VM. We are available.
This has been VM Wealth. It has been a wonderful, wonderful, rich sharing of information. I've learned a great deal. A lot that I'm going to go and share with a number of people, a lot of, especially the creatives that I know that are not necessarily feeling as optimistic as, as many of the others. Many other people who want to know that they can, that they're able to engage with a company with their 2 taxis or their farm or whatever it is that they're doing, that there are opportunities here. And also for the corporate who wants to be able to examine their portfolio, they might need maybe a new perspective to the one that they had before. One that is looking into the new normal, one that is looking into the new ways of doing business. I am excited about that IP information, intellectual property information. It means that VM is forward thinking. So until our next program, this is the first in a series of 3 that we're going to be looking at a number of different areas, and today we were talking about new business and the new normal, and I'd like to thank all of our guests for joining us as we move forward to number 2 and number 3 as we have some really stirring discussions about your wealth. Thanks for joining us. I'm Deborah Hickling Gordon. Have a good evening.